This is an update on Ethereum, which has been rallying pretty well, and we are in the midst of a sideways consolidation over the past few days, right around the 3,900 zone, as you can see here. And that's done some wonders for us with resetting the MACD, but we are already getting back up to overbought levels. Again, the word overbought is relative. When you're rallying to all-time highs, it doesn't have as much meaning. When we look at our micro picture, the 1 hour view, our primary expectation is that we have already completed a wave one that topped right around what, $3,300 or so. And we had a brief, shallower than expected wave two, and we have already commenced in our wave three. If that primary pattern holds, our wave three would take us up to right around the 5,200 zone, somewhere around there, pull back in the fourth wave, and then ultimately top right around the 56, 57, 5,800 zone before pulling back in a larger wave two. That is the standard expectation right now. However, there's another alternate pattern that is shaping up that I have marked in blue. I had pointed this out earlier, and it's a pattern that closely mimics the one we are seeing in Bitcoin. And that's that either we have completed a higher high for a larger wave one, or that we have a little bit further to go before we're finished with an actual wave one. So this might be the last consolidation before one more heave upwards closer to 4,600 range. And then we might see a pullback, which is marked here in blue, into this purple box, maybe not quite as deep. If you are trying to get into Ethereum, keep dollar cost averaging, that's working just fine. If you're trying to buy a lump sum, it may be wise to wait to see how this develops. We may have a better buying opportunity on a wave two dip, if that's the case. Either way, Ethereum's looking pretty healthy. Either pattern is bullish. We wouldn't expect the retrace to go too much further down than what we would consider the fourth wave. So maybe the low 3,000 range. So again, it may be a quick precipitous drop, might scare a few people, but it would be a healthy correction in an overall bull market. On the big picture, our wave one expectation would have we would like to see it hit past all-time highs. So the 4,800 range would be an ideal wave one. So if we see a larger wave one take hold, that would not be a bad thing to see from the big picture perspective. After wave two pullback, we start entering this purple box, which many months ago I had set up as a potential topping region, and that still holds to this day. We may top in this box, anywhere in this box actually. So our wave three would take us up to the 6,000 range, and we would like to see some bigger extensions to make it a higher probability that we do hit those loftier, higher targets. After a lengthy micro fourth wave correction, we should see an eventual top anywhere from 9,200 all the way up to as much as $18,000, $19,000. Again, it's a little early to make a call on that. We need to see how this pattern develops. Again, the higher we go on our subwaves, such as the subwave one or the subwave three, the higher we can project the ultimate top. The other thing that puts the wind behind our sails in cryptos and commodities is that fifth waves often extend. And I've repeated this point over and over. We may see a parabolic blow off top to finish off this larger rally, this larger fifth wave. So in that case, again, $14,000, $15,000 are still absolutely within reasonable expectation. I think I have 15,235 as a target of high confluence, but there are of course resistances at 7,500 range, the 12,000 range, so on and so forth. That these often serve as just little speed bumps on the way to a higher target. But in summary, again, bullish picture, nothing to be alarmed about. Still looking good. I'd like to see some high extensions. We'll see if we curl down for a wave two or if we just go directly into our wave three. Until next time, thank you for watching and happy trading.